So because you have a fear of missing out, you will then force trades. And because you force trades, maybe the first or the second or even the third trade, right, will be profitable for you if you force a trade. But then afterwards, you will burn your hands when you force trades. So then rather wait for a trade, right? And then I promise you, I won't say the confidence, but the confidence and the execution of the trade, you will gain much more, I don't know what's the right word, but you'll be proud of the trades that you take when you wait for the trades, right? So it will be much more trades paying off in terms of emotional trades and then also money-wise, right? So you can make a small trade of this and it was not it was a forced trade. If you took this trade, for instance, from here to here, it was a forced trade. But if you waited for the trade, then that was the full amount that you paid off. And that was really profitable. So being able to wait for trades, that's very important to being a profitable trader. Okay.
So patience is key in this trading thing.
Patience is really key, guys. I don't know if you guys remember, I sent a picture on the group of like confidence will get you many places, but patience and self-discipline will get you much further, much further than talent even will get you. And imagine if you have all of them. If you have talent regarding trading, if you have insight regarding trading, of which we teach you with insight, and if you have patience and self-discipline, that's like a major bomb, guys. You will absolutely kill the market.
That's true.
Okay.
Michael,
What's up?
just regarding that example you gave us, like where you drew it out, catching it on the golden zone, and like
Okay.
you explaining now being patient and stuff. Will we learn later on? I'm just asking because you see, like that was just a one leg in buying, but as we see, the market
Yes.
rose quite a lot. So
Yes.
will we learn later on, like where, like on a 4-hour time frame, which is a swing trade, to expect it to go, but like on a higher time frame, to hold like a trade like that for a week or two or so till it gets to the high it created, but like on the overall chart.
Yeah, so if I understand your question correctly, if you quickly want to see, I'm just quickly going to scout with you, right? But you're going to learn it. So if you quickly want to scout, this was your trade that you wanted to take. This was the low, this was the high, right?
Yes.
We didn't know anything happening regarding before this. Okay. So this was then your first point of interest. This would be your second point of interest, first and your second. But we know that on the higher time frame, we know that the golden zone is more probability trade than the Sasha zone, right? So I would wait for Sasha, for golden zone. Then I would go back and I would scout. Where's my previous high? Right?
Okay.
And what I would do is, I won't take the exact high. I would just take like a few pips beneath it. And that would be my point of my take profit. And look where we got our take profit there. Exactly.
Now, Michael, I don't understand why using the previous high as your take profit. We had a breakout structure to the downside, and that's so.
We had to take profit, a change of character to the downside.
Yes, and then to highlight the Sasha
character.
Sorry?
I said, was it however a change of character? Because on the daily, we know that we had a shock on the daily.
We had a breakout structure to the downside.
Yes, we had a shock on the daily. Right? So then if we had a change of character on the daily and we respected the low, we would then look to buy to the upside.
Okay. So that's where price might react to.
Yes. So price would maybe react to this high. So that's why this would be my first take profit.
Okay. I understand.
Okay, so then why it formed is probably to an even higher high previously.
Yes. So
There it is. Okay.
you see, and then even my next high would be that high, and that even also got to take profit. Like that profit was taken over there, just by pure example, right? So then if you wanted to take this sell over here, this sell, where would your first take profit be after this sell,
The low.
which is this?
Take profit.
Yes.
Yes. So this would, my first take profit would be over here at this low, right? My second one would be here. If I wanted like multiple take profits, so this is just what I want to show you guys. This would be my third. This is another low. Kind of important low. There's another low, right? So that would be my few take profits. And then what I would do is I would leave the rest running to come down to here, if we would ever come down here. And if we broke this low, then that would be my stop loss, right? If we broke this low and we broke down even more, that would then be my new stop loss. So whenever we turn around on the trade, it takes me out there, which essentially we got out over here on our trade,
It's a counter trend rate.
which is it's a very good trade. So we just took our profit on this trade from here to here. Okay, but I don't want to, it's just regarding trading ranges. Okay, but I don't want to make you guys confused. I want to stick to the topic, which is the golden zone and then the Sasha zone, and then everything prior to that.
So we have can you tell us the nature that the nature of what significance does the nature of the pullback plays when it comes to the pullback? Sometimes we have impulsive retracement into a peer or into the POIs, and then we have a corrective one. So how does it play like a role? Which significance does that play? Sometimes price comes fast to the POI, and sometimes it comes in the corrective and impulsive way.
Okay, so just to understand your question correctly, that was maybe an impulsive move to a point of interest, and that was a correction move into the point of interest.
Yes.
Okay, so on an impulsive move, obviously they are moving price rapidly without anybody getting involved in the market, right? But somewhere along the market, there's going to be, which you guys will learn about it next week, right? Which is regarding order blocks and etc. So I don't want to dive too deeply into it now, but then a lot of orders will lie over there. And then that's why we had this reaction on the market after we had this impulsive move. This is also an impulse.
Okay.
A majority of the time you get an impulse move on supply and demand and other stuff as well. I don't want to dive into them. Okay. And then after it showed a correction, we had a change of character, created inducement on the change of character. Can you guys see that?
Yeah.
Yes.
Took the liquidity, and then we moved up to our new character,
Michael.
which is trend. Yes.
Okay. So it went to Sasha then, where you are.
Yes, and this is exactly what I said to you. Remember we are on the 4 hour, right? And even after we have a change of character, we run to Sasha.
And it's liquidity then.
Look, I created liquidity just below Sasha. That's how we knew that they would come to Sasha.
Okay.
And remember what I said
it induced it, then it went up and then came again, and they created
Yes,
liquidity.
that's the name of the game, guys, is they create liquidity and then they grab it. Look, remember on the 15-minute, this was liquidity, but it was liquidity where?
Golden
In the
zone.
golden. Yeah. So then we know, right? Okay, so they want to tap into the golden zone. And even if you look on the 5-minute, look here, they would most probably create liquidity before they would push up. That's how they work. Look here. After they have the liquidity, then they go the direction of the market. And I can reassure you that we had a change of character happening at this area on the 1 minute. So probably this was the move. You see the shock happened there, and then we came back to wherever. I can't see on the 1 minute because we can't go back to the 1 minute, but that would be probably your shock on the 1 minute.
So Michael,
Yes.
like just
Sorry.
for now, based on our current knowledge that we have, you know, before
Yes.
the future classes, when it gets like to this, just do not get involved in the liquidity. We stick to finding our patterns that we look for, our chocks and stuff, not to
Yes,
get involved in that liquidity creation.
Yeah, so please get involved in whenever you know what we've taught you up until this point. Okay.
So
Nothing
the safest option is change of character in that zone.
Yes,
Nothing else.
yes. And again, if you did not receive a change of character, what do we do then? We do not take the trade, because then we don't want to give the market money. We want to take the market's money. And I promise you, and I can reassure you, right? What Ali and Marco teaches you is the most safest way to make money without losing a lot of money. Like your win to reward ratio will be much bigger than what you just lose and make. Okay.
Michael, would you say us as the beginners, or like people that had not much prior knowledge to the course, but like, would you say we're supposed to be trading by now, or don't we have all the bits and pieces as yet?
No, you don't have all the bits and pieces as yet, but what I can reassure you is you have a clear and a very good foundation. You don't have something to unlearn before you can learn, right? You can just learn from the exact same, the correct way. Where other people that traded before, they have some things to unlearn, as psychology-wise, or maybe retail or whatever. What they also have in experience, though, what they have in their advantage is experience. Okay, so you will be profitable at the end. It will maybe take you 6 months, right? But it will maybe take you even in the mentorship course. But that is totally up to you regarding your psychology. Trading is literally 70% psychology and 30% skill. You can have all the skill. Guys, there's people trading retail and they make money. And I've got one question for you guys. They trade retail and they make money. No. They trade retail and they make money. Now, mind
people, I just want to interfere there. I'm one of few people who came in for the second time in this mentorship. One thing I can tell you is that psychology is like 90% of your trading. You can have your entries correct and everything, but then if your psychology is not at the right place, you won't make it. So basically, I'm just for the psychology. So I was rushing into trades. I was like a lot of wrong
impulsive,
things. Yes. So psychology is like everything.
Exactly. So what I quickly want to bring this to you guys, right? And I'm not saying that, just hear me out on this. Okay. So if retail traders make money of trading retail, how can they, I asked myself this question, how can retail people make money of trading retail, but retail is not the correct way of trading on the Forex market? That was my question, right? Okay. I came to this conclusion.
So what was your question again, Michael?
So I just asked myself the question, right? If people trading only retail trading, if they make money off the market, how on earth do they make money trading the wrong model?
Psychology.
Right? That was my question. And I have a simple answer for you. If price comes to, right, we have I did retail before this. So we have our first test, we have our second test on this trend line, right? Retail traders always take the third trade on a by example, a trend line. So this would be their trade. Okay. Just the take profit underneath the trend. This would be the take profit. Okay. They're not dumb enough. Hear me out. They're not dumb enough, but they are persistent. I don't know, but their mentor taught them whenever there's a third touch, we buy, because then the market is going to go in our direction. Then they go like sheep and then they buy at the third touch, right? But sometimes we are more clever trading SMC because then we ask questions. We say, okay, but why was this third touch happening? Why is the market doing whatever it's doing? Why, if we break just below this, why did this happen? Because I'm not just going to believe that we're just going to touch off a third touch of a line. There's no explanation for that, right? You guys with me?
Yeah.
Yes.
Yes.
They're liquidated. Okay.
I'm gonna come to the conclusion, right? If you have the mind of asking questions of why does the market do that? Then you want to understand, why does the market do that? You're not only a sheep buying or selling when other people tell you to buy or sell. You on your own want to figure out why price does a certain thing, right? Now we teach you at SMF at Footprint. There's certain footprints in the market where certain institutions, they communicate with each other, because if they call and they buy or whatever, they communicate with each other on the charts. So there's certain footprints they leave behind. So now we understand whenever there's a liquidity grab, we know the reason behind the liquidity grab. Whenever there's a supply demand being tapped into, we know that that's the reason for them pushing price. You understand? You with me? Now, if we then apply the discipline, number one, number two, the psychology, and then number three, the theory that we have. If we just apply them, guys, you'll be profitable. I promise you, you will be profitable and you will smile in 6 months. The biggest problem is we want to force trades and we have fear of missing out on trades. Don't do that. I promise you, if you'd rather wait on the 4 hour on a golden zone, you will gain a proper trade. Because look at this. If we have a 4 hour zone, sorry, I'm rambling on, right? But I'm very passionate about this. If we have a 4 hour trade, this was your golden zone. Look exactly how every single time they tap into the golden zone, golden zone, golden zone.
So Michael, you don't catch trades time frames,
Sorry.
like the 50 minutes, 5 small trades. You don't take those.
Sorry, I'm losing you. I think I lost you for a minute.
I'm asking, you don't take trades on what time frame? Like,
I do take trades on 15 minutes, but again, I take trades on 15 minutes when I see a opportunity, such as a change of character and a retest on the change of character, and then I see it coming to my point of interest, then I would take the trade, right? So it's everything that we learn you accordingly. So I would take trades on Sasha, and then something you'll learn next week. But the thing that I'm really emphasizing on is take trades when it's coming to your point of interest. Don't force trades. Take trades when everything that we learn you and we teach you, take trades when the market is happening at that point, because I promise you, you will be profitable. When you walk out of advanced, guys, even if you turn 20 Rand into 40 Rand, you will be profitable. I promise you.
I'll have a question.
Go backtest, because I promise you, after you backtest and you being consistently persistent, you will be profitable. Yes, the question.
I want to ask, when do you move to break even?
When I break the, say for instance, if I entered on the 5 minute low or the 5 minute high, if we are then at that 5 minute high and I see we either break that 5 minute high or we're mitigating the 5 minute high, I break even.
So if your trade goes out of the trading range that you were using, then you go to break even.
Yes. So for instance, by example, say we had this, let me show you quickly a live example of where I broke even and I did not catch a trade, right? I think that would be more helpful than where I actually caught the trade. Okay, so say we then here, right? We can see that this is the low that created, okay? And then maybe on the, let's go back to the 1 minute. I don't know if we're going to have a change of character on this 1 minute though. Yeah, there we go. Okay, fractal, 1 minute though. You can see that was the move, right? Oops. That was the move. Then my entry would have been, where did we change character? We changed character here. Okay. So then that would be my Sasha. This would be my point of interest. Just quickly showing you top to bottom analysis. This would be my sniper entry. Okay. Then I would enter on the market regarding here. This would be my stop loss just underneath my Sasha. So when we broke this high, okay, or mitigating this high, I would go break even. Okay.
Okay. Okay.
We
So
broke the
what-
high. I would go break even.
So so Michael, why didn't you take an entry on the first touch on when price? Oh, this is a confirmation entry and then unconfirmed.
Yes, it's a confirmation entry. So there was a change of character. There was a break of structure.
Okay.
This was your risk entry. Okay. So then that was my confirmation entry. And then there, whenever it breaks this high, I would go break even.
Okay, I understand.
Okay.
So this
15 minutes.
Okay.
Sorry, you wanted to ask?
I was saying when we have a change of character, we must look at the session zone, and those lows and highs are just liquidity.
Yes.
Okay.
Michael, looking at the 4-hour chart of NAS, there's obviously it's bearish, the 4-hour, I think.
Okay.
How do you use Sasha to determine where the market will stop and make a turnaround? Or if you can show that to us in a sense, like, can you use Sasha on the 4-hour high and low to determine where the market would change?
Okay, we can quickly run through that. So just quickly wanted to show you guys, this was, I would have gotten break even on the 4-hour chart, right? So my first take profit would have been around, I would have taken partials at this high, and then I would have gotten taken out on the rest of my trade over here. Okay. So you say on the
Okay.
4-hour.
Thank you, Michael.
Oh, good. Oh, good. So on the 4-hour high, we are currently bearish, right? Are we bearish on the 4-hour high and low? 4-hour trade chart?
No.
Nice. So we're bullish still. We're still bullish on the 4-hour. We never broke the low. Okay.
On my chart, it's broken. I don't know how.
On your 4-hour high on trading view or on MetaTrader?
Trading view.
Okay, this is important though. So I want you guys to go see. I also made this mistake sometime, that sometimes just go double check on your trading view. Let me see if I can get you guys an example. Let's take.
Yeah, that's the one I'm using.
You're using it under. Okay.
Yes.
This is a good example. So we have at this low, we have a full body closure, right? But look at what time the candle opened at 11 o'clock. Can you see? And this one opened at 3 o'clock. Then go look on your MetaTrader. Your MetaTrader would say 12 o'clock and 4 o'clock.
Oh,
Okay, so just double check on that.
oh, so we would go with the one that opens at 12 and 4 o'clock, not the 11 and 1 o'clock.
Yes, so if your broker on MetaTrader says 11 o'clock, then you go with 11 o'clock. If your broker on MetaTrader says 12 o'clock, then you go with 12 o'clock.
Okay, perfect. So right now, would you say the law was violated or it was broken?
I would say it's violated.
Violated.
On my chart, it's violated.
Okay.
Okay.
We did have a,
Then if
we
you
did have
look
a
on the
change of character.
Sorry?
So on the low on this time frame, we do have a change of character because we did have a change of character on the session zone of this 4-hour range.
On the buy side, going upwards again.
Still the move down, then we have a change of character. The high was taken out.
This one.
This, yes, we said a change of character of the on this
Yes,
time
the
frame.
fractal. That's correct. Yes, the fractal. So currently it's still cats and mouse. So I'm not, in all honesty, guys, I'm not trading NASDAQ now. Like I'm not trading until I see a break of this high or this low. So for now, I would maybe look at currencies or whatever if I want to trade. But again, patient pays.
So cat and mouse is when like the market stays inside the trading range for too long, and it's not deciding. You can't see like what really they want to do.
Yes, yes. So maybe by example quickly, I would maybe take a trade off of just to show you I'm not going to take this trade because of this liquidity, right? But let's say this liquidity wasn't there. I would take a trade off of this over there, which is supply. You with me? But because I know there's liquidity resting above it, I won't take the trade. Okay. So I quickly want to
you would say
regarding
the buy move is more favorable then, since there's a liquidity lying at the top there.
I would say it's favorable maybe, but remember what they would do is they would take out early sellers also.
But if I see a change of character on a lower time frame, maybe I can take the trade and
Yes.
create liquidity.
Yes.
So where would you target? Would you target the external low or do you on that current fractal range?
I would target in according to what you guys have learned up until now, I would target this liquidity grab. So let's go back. I didn't do this before because I haven't been on the charts this week. I've been quite busy. But let's say we had this liquidity grab. On this liquidity grab, let me go back to the 1 minute. Okay, we can't. 1 minute. This replay thing, guys, has me sometimes frustrated, but it really helps. Now I can see this. So I would have this liquidity grab and just see what's going on at the liquidity grab. So that would be my number one, just quickly scouting point of interest. Then I would like to see what happened at the point of interest at my liquidity grab. And then thereafter, I would make a decision if I want to get into the trade or not. And quickly going to do it with you guys, right? So we had a clear change of character here. Right? And we don't see, I don't see anything else of me taking this trade on a sell. So I won't take this trade. Unless I have a change of character in my point of interest. Okay. But that's a good question. What time frame are you using to see if the market is starting to give a proper direction, right? So you can see maybe a clear direction on the daily or the 4 hour or the 1 hour. So if I can see a clear direction on the 4 hour, by example, let's start with the daily. If I can see a clear direction on the daily, I would then look to see if I can also see a clear direction on the 4 hour. Right? If I can't see the clear direction on the 4 hour of what I see on the daily, I will not trade it. I would wait. Because what they can maybe do is create more liquidity, come down, and then is that a change of character, guys? That and that. Is that a change of character?
Nope.
Nope, because this is the low.
It's not.
Okay. But anyway, so I hope I answered some of the questions that there was. And just quickly want to get back to the recap.
Okay, thank you, Michael.
The golden zone. Everybody understands the golden zone, right? So the golden zone is very important regarding higher time frame. If you can get that, then you will catch really good high time frame moves, and you will be able, if you have the psychology, and then if you don't train yourself to have the psychology, you'll be able to hold trades for a very long time. Okay, that's how Marco makes his money. Is he takes trades at a certain point of interest, and then he has the psychology and the patience to hold them to a certain point. Like he made this move. I don't know if you guys saw on Instagram, he caught this move from this very top, right? Ride it all the way to the bottom. When he saw this change of character happen, he got out at this point.
Yeah, that's a massive move.
It's a massive move, guys. It's absolutely massive. This is
Michael, we be told to trade like
7,500 pips. It's huge.
would we be also told to trade like that, like long term?
You can already trade like that, guys. That's what I'm saying, kind of more or less. So next week you will learn that why he entered there. But I mean, if you caught this move, look at here, look at this. If you had the psychology and you caught this move here, there you entered, right? There's another reason why you could have entered there, but we will get into that next week. This was a bigger move than 7,500 pips. This was 10,600 pips.
Yep.
And why was my stop loss at this point? Again, my take profit. My stop loss, my take profit. So then your move was from your point of interest to your take profit, which I would have put my take profit over here, just slightly below the high. And that was 9,800 pips, guys. That's a crazy amount of trade.
Michael, I just have a quick question based on your daily high. Shouldn't it be on your left-hand side? Why is it on that side?
This
Shouldn't
one?
your daily high be on the other side? I see you marked it there where your 4-hour high is.
Yes. So my daily high, remember we had a change of character on the daily over here. Right? So there was our daily move. So then that became a new high. That was a violation of the high. A retest.
Structure.
So there's a break of structure somewhere there, Apostle.
Here's the break of structure.
Yeah.
You can see whenever we zoom in, this was should be a liquidity grab. What are we? Blackpool. Are we on the 4-hour? That's why. So on the daily, you will see that that was a liquidity grab. Can you see it much clearer now?
Yes.
Okay. That's why that's my low and that's my high. And we had a break of a change of character here and a break of structure here. Okay. Is there any other questions, guys, regarding the whole mentorship or something that you're not confused about or not clear about? If you went back and back tested something and you have some questions regarding that, is there anything regarding Sasha zone, supply demand, how to use the FIP correctly, or anything regarding that?
Michael,
Yes.
the supply and demand zones is pretty basic and easy, but it makes more sense for me on like a higher time frame. When you start drawing them on lower time frame, it just gets too cluttered.
Yeah, I agree with you. I agree.
Because then you don't know what is strong, what is gonna hold, and there's many of them on like a 5-minute chart. So what I normally do is, I don't know if it's right, but I draw like a 1 hour chart or 4 hour supply and demand, and then just drop to lower time frame and know that those are the more, like stronger zones.
Yes. So what you can do though, is you have to like the correct supply demand zone, is you can refine it to lower time frames. But in all honesty, I will not refine my supply demand lower than 1 hour.
Yeah, so 4 hours stays the best.
Yes. So can you guys see quickly, we will start just another Zoom and wrap up some questions, but can you guys see that again, someone asked me the question, why, if they move after the golden zone, but not tap into Sasha, what would happen then? Look at what what they are busy doing, right? So then probably we will come back, make equal highs, then I would see something like this happening. Because again, after every break of structure, the market gets weaker. So there was our first break of structure. That was the weakness that the market got to. That was the